Good morning, ladies and gentlemen, everybody. Welcome back to the stream. We'll be getting started here in about just a second or two. So hold on just a sec. But currently in the pre-market session, the market has flipped back to the positive side just a little bit. So essentially it's on the screen, that 663.95 price. If we're going to see, more of a bearish day, then generally speaking, the market would have to be below that price point. Otherwise, it's just, you just can't really sell the market too hard today. So everything is little dip long for the moment, unless we kind of roll back below 663.95, then you can kind of look to be more bearish, if you will. So audio bit rate. What's up, Josh? Does the volume sound okay? Because it's saying that like my audio bit rate's not correct, even though. But anyways, yeah, just let me know if it sounds decent. But yeah. All right, I gotta send out an email real quick, and then once I'm done with that, should be all good. Steve, good morning. How's it going? Good morning. Good morning. All right, sorry. Just finishing up this email, and then we'll kind of get started. Okay, all right, there we go. Good to go. Good to go. Sorry about that. All right, yeah. So we are in a little bit of an uptrend. Nothing crazy again. Price of the market is above 663.95. So generally speaking, that will be bullish, and until it's not, I guess you could say. Yeah, I guess if you guys have any questions about it, feel free. Let me know. Yeah. Also, didn't really see this morning, as I was kind of flipping through things. Wasn't really any penny stocks that kind of popped up today, at the moment that I was sitting in front of the computer, that really made any sense, to be taking any new positions on. So just gonna kind of chill out and see if something else pops up at some point that looks decent. But for the moment, I mean, there's a couple potential candidates, but they're more of a in the waiting game, if you will. So we're not quite there with some of those guys. What's up, Anthony? Hello, brother. Haven't seen you in, well, who knows how long. Long time. Nope, Josh. I still use standard deviation. Still on charts. It's just not on the trading view charts here, if you will. So we still use that. It just it really just, again, it has to be, it's best to use when something's trading at like -3 or something like that. So one of the more recent, still kind of long time, but probably this would be the trade. This is, hold on, where are we at? I gotta get to a daily chart. The last time I used standard deviation, not last time, but I would say the last good setup that I used standard deviation for was to get long the market like right there into this bottom, because that was like the most recent market downturn, like big one, and this downturn on the mark, that's weird. Why is it doing that? That downturn in the market hit -3, may have been -4 on the daily. I kind of forget, but I mean, obviously, well, yeah, either way, one of the two. It was either -3 or -4, and so that's when I was getting long the market here, for, well, that's weird. Looks like my browser's just quit. That's crazy. So hopefully somehow we're okay and still streaming. I don't know. All of a sudden my browser's literally just shut off there. That's kind of weird. All right, looks like yeah, I don't know what was up with that. All of a sudden my browser's literally just shut off, which haven't had that happen in some time. So yeah, anyways, right now, just know that our pullback destination right now is arguably back down to like right here, too. So we're gonna kind of mention this real fast, that even though the market may be bullish above said level, this is still the this is arguably a pullback target on the day. And what I mean by that is, whenever the market is trading over the price that I'm drawing on the screen, then the market can flip bullish. And obviously, if the market is below this price, it can flip bearish. And many times, you know, with the way that this is currently set up, the price is not very far away from that 50 SMA. So a lot of times into the open, we'll drop the price to test it, and if support is held, then we stay up. If no support, then we fall lower. So basically, the level that's telling us that the market can flip back to bullish is also the pullback target in the event we don't just take off into a long, right? So if the market doesn't just take off into long, which sounds kind of dumb when I say it, I guess, but it's, again, if the market doesn't just randomly take off into a long, which means go up, then generally it's going to go down. And if it were to go down, then it would most likely go down to the levels that dictate whether or not it's bullish or bearish. So essentially that yellow line, 66395, give or take, is our pullback target idea going into the open and pretty much the remainder of the early morning. And then, so we'll obviously probably look to see the market come down initially. And if it can hold, then we'll stay macro swing up. And if it does not hold, then we will flip and probably look at some sort of bearish movement today. Now, part of the reason why this isn't just one of those easy longs, and again, that's what I'm saying, I don't think it's an easy, you know, we've transitioned positive, but I just don't really think we're going to blast off into a long. I personally think the market's going to pull back down to 66395, and then at which point we arguably break down or whatever. But the reason I'm not really being aggressively long bias optimism here. Good morning, Alan. Yeah, the reason I'm not being optimistically, super long bias in this moment is because the volatility index is still suggesting that we got to be cautious. So if we look here into the volatility index is still in an uptrend. So volatility is still long bias right now, or volatility is still long. Generally, when volatility is long bias or in an uptrend, we usually pull markets back, kind of like we did yesterday. So again, it's kind of a situation where the two markets right now, and I just posted a video about this last night, so if some of you guys want to check that out, feel free. But just posted a video about this last night where when the two markets aren't talking correctly and they're having divergence, again, you have to start kind of asking the question, which is why is the volatility index trending in the positive direction at the same time the market, like this morning, is up into a positive move. So I may have not explained that super well, but all it really means is if the price of the volatility index is above either of these two lines here that I'm drawing on, then the volatility index is in an uptrend. And again, generally when the VIX is in an uptrend, markets are pulling back or they're not going into successful buy moves. So just know generally, if the market's in a downtrend, VIX is in a buy signal. If the market's in a buy signal, the VIX is in a downtrend. But when the market's trying to go into a buy move and the VIX is in a buy move, one of them is going to be wrong. So right now, again, what the market is telling us is that the volatility index is still positive and still trending in a way that says volatility is here. And if volatility is still here, then that means you're supposed to be fearful. Not really, but the logic is there's still fear here. So just because the market is above the level that says we can flip the market bullish, the volatility index is not quite suggesting that that's a legit buy move, because the volatility index is suggesting that volatility and fear is still welcome and is still present within our markets. Now, if the market had flipped back to the positive side, as identified by the green arrows, and the volatility index at the same time was breaking down the supports here in yellow, then the long would be breaking up because volatility would be retreating in the markets. But volatility is not retreating right now. Volatility from yesterday to this morning has simply pulled back down towards trend support. Therefore, in order for the markets to really be long right now, these would have to be breaking down and telling us that volatility is retreating, but it's not. So if volatility is not retreating in the markets, then JPOS, good morning. If volatility is not retreating, then that tells traders to be on the edge, right? Like be cautious, if you will. So since volatility has not told us that the long should blow up, we're going to be looking for most likely some sort of backtrack into the open, which is most likely down to 66395 for the moment, give or take. And then at that point, the market will have the opportunity to either hold support, somewhere around 66395 and or break down, right? So that's kind of it. Is the VIX isn't telling us to be long the market. The market's saying that we could arguably be long the market. We just need a little bit more time here, based off of what the two markets are telling us. So anyways, good morning to you all. Cheers. Hope you guys enjoy this morning's stream. I'm going to take just a quick second to, again, scan through some different penny stocks this morning to see if anything is starting to trigger levels that make sense. I would love to say the United States is going to win the Ryder Cup this year, but I guess anything can happen based off of last year. I mean, you would assume, right? You'd assume the United States with the players that they got, but again, like even like for example, like Bryson, I feel like Bryson doesn't play very well when he's in sort of like a match play environment. I feel like he always kind of drops the ball there. Analysis, JZXN and LAC. Yeah, for some reason, I always feel like Bryson drops the ball like in competitive match play situations, or like head-to-head matches. I don't know why. So he always makes me a little nervous in that regard. Yeah, so JZXN and LAC. I will bring down this chart real quick. So I've looked at both of these over the past 2 days. I forget the news. Someone said something about Trump and LAC last night, but yeah, when we look at LAC, pretty much it's, I don't know why my chart's being like that. That's weird. Huh. Yeah, so LAC, there we go. I was going to say, it's like not allowing me to zoom out. Yeah, so LAC started an uptrend yesterday at about $3.20. So it's extremely, well, I would say it's extremely overbought. I mean, obviously it's probably overbought to some degree. But for me, when I look at LAC, I see that it started an uptrend at the price of like $3 to $3.42 yesterday with whatever news was after hours. It might have included Trump. I don't know. I don't really pay attention to news that much. But yeah, so it started an uptrend down here. So essentially, since we're very far away from the uptrend start, the risk is obviously way elevated because if this doesn't obviously continue, and let's just say worst case scenario went straight down to test its uptrend support, then the decrease from here is like 47%. So it's just very far away from the uptrend start, and then probably trading up into some standard deviation levels that aren't very promising, if you will. So yeah, so for me, LAC is just, it's too extended away from levels that would make sense for me to want to be long bias at for low risk. Yeah. I think, yeah, LAC had something to do with Trump. And then if we look at JZXN is, I think, pretty much similar to LAC, which is that if we look at JZXN, it started its 4-hour uptrend back here. So I'm going to highlight that. And then it started its 30-minute uptrend here. And then, currently... sorry, let me get back to where I was. Currently, where's my 30-minute? Here we go. Currently, we have trend support there. And what about the 4-hour? That's about the same. All right, cool. So when we look at JZXN here, 5-day, 5-minute. Actually, I need to go back a little further than that. Sorry, JZXN. I mean, to be fast, JZXN is not in a position where I think I would like to be long this market. Not that it can't go higher and all that, but it's just, again, it's a little extended from areas where I think the low risk is at, right? So essentially, for any penny stocks these days in long bias environments, I like to be long as close as possible to where uptrends that I like start. So the 4-hour uptrend started here where I'm pointing to, right? So now we're all the way here, okay? The 30-minute uptrend that I like started right there, right? And now we're all the way up here. And then the current trend support that I like is all the way down here. So it's 46% to the downside before my closest support that I pay attention to or like. So for LAC, if you'd asked me about, for JZXN, if you had asked me about JZXN on this day when it was breaking over the 4-hour, I'd say it has some potential for low risk. And if you'd asked me about JZXN on this day when it was breaking over the 30-minute, I would say it has some potential. But since the market has blown up since the uptrend starts, then I would say that the long kind of has already taken place. You're late, right? So I'm not interested in JZXN. And then I went through pretty much every other penny stock that I've seen kind of push up this morning so far. And really none of them have triggered the uptrend starts, or well, they have, but none of them are currently at position that I think makes sense to be getting long on. And now remember, it's right, not that these things can't keep going up. It's just your risk becomes extremely elevated when you're the one buying up the move and you're not the one starting the uptrend, you know? So I'm not not very interested in JZXN or LAC, and it's, again, it has nothing to do with the fact they can't still perform well. It's just we're not the ones starting the uptrend on those stocks, unfortunately. Bitcoin. Oh yeah. So, anyways, we maybe touch on what time we got. 9:22. So yeah, about 8 minutes here. But yeah, I'm gonna do a quick run through on some stuff. You know, the only other penny stock really this morning that kind of started triggering stuff was like RCT, because RCT did just start an uptrend today. So like that's the only arguably stock that kind of sparked some interest. But anyways. Yeah, I'll kind of mention this one just briefly. So this is another one that obviously, arguably is, you know, of on watch today. And really the main reason why is if we look at RCT, again, we can see just today RCT has entered into an uptrend. The uptrend started all the way to $1.07, so it's a little inflated from the $1.07 price, but essentially RCT started an uptrend today at $1.07, started an uptrend the other day here at 91 cents. So it's one that's kind of spiking up with a little momentum and just starting an uptrend today. So this one might have some potential to it. But again, let me get out of this real quick and we're going to go here. Yeah, so, but, you know, it said essentially RCT starts an uptrend where over this yellow line. Well, the first one was back here. So, right, so this would be uptrend start, pull back to test uptrend start, continue, then break out the 4 hour. 4 hours now positive, so there's a 4 hour uptrend going on with RCT. It pulled back, did not test trend support, obviously staying up. So, you know, if this continues its uptrend, keeps going, great. If not, the risk is pretty much all the way back down to $1.07, arguably, with a full failed long move. But so that one kind of sparked some interest today, just because you could see it's just starting an uptrend, you know, and hadn't blown up too much. So anyway, that was kind of interesting. Bitcoin didn't quite sell down to 10,000 or 110,700. We hit a low of 11,093 or so, like 111,000. So again, that one's a little, what would I say? Pretty close to the sell, desired sell move there. Yeah, so I mean, RCT is one where, I mean, when I say wait for the, again, it's all just, there's no guarantee it goes up. Ideally, RCT is one you want to be buying, you know, a few minutes ago, more than a few minutes ago. Again, as close as you could have to $1.07. So your risk right now is, you know, on RCT is 24% down, right? So that's what I mean is it could go down 24% before a dip gets bought and then still rallies the market up. So it's one of those things where we know it's starting an upturn at $1.07. How long does it last? We'll see. If it fails, $1.07 will be down. So it's got, you know, some 20-something% of risk to the downside. So, you know, if you wanted to take a position now, you'd have to be comfortable with not that you have to lose 27%, but just know that there's magnets that could take it down 27% right now, and it could still at that point be in an uptrend. You know what I mean? So there's 27% potential decrease, but stock still be bullish. So it's just one of those things. So yeah, anyways, with Bitcoin probably looking at a bit of a counter bounce here. We got very close to our kind of weekly pullback target on Bitcoin. So now we're pretty much looking at a counter long trade. It's kind of mapped off right here with this little, I don't know, cute green and whatever box. But yeah, we're pretty much expecting Bitcoin at this point is going to be backtracking towards the price of 114,500 to 114,254 or so. So yeah. So we'll just kind of do, look at this, put this guy in there like a dad. Setting, take this guy green. Yeah, so, pretty much I would just say the counter target right now for Bitcoin is, arguably somewhere towards, again, 114,000 or something. I'm assuming, based off of some volume weighted average price stuff and trend and whatever else, that there could be a move towards these price levels. Oh, well, thanks, Chris. Appreciate that, brother. Appreciate that. Nope, not first YouTube stream in a while. I guess we streamed one yesterday, but so again, kind of narrative, if you will, so far for the day. Narrative would be the stock market has flipped back to 30-minute macro swing long, macro positive market. We are now waiting to see if the volatility index starts to enter a downtrend. If it does, it should help confirm the macro or the new potential long on the market. So again, right now we have the market flipping levels that can take it back to positive, but the volatility index is still trading above certain levels that don't give us the full-blown long. So if in the event the VIX starts to break down those levels, we will see the markets push up into a long, right? There was a stream before yesterday, couple days ago maybe now, or last week, and probably one before that, but some time ago. But pretty much these are of the newer streams, if you will. Oh, there's something. Yeah, so there's a TNFA. That's a penny stock that was hitting the scanners that I kind of missed today. That would have been a good buy because it just started an uptrend today. But anyways. Okay, yeah, sorry about that. Anyway, so really just looks like market's pulling back down into the open to, again, really just the suggested expected pullback over under. So let's just double check a couple other things. So yeah, you can see market right now is just, again, simply pulling back down to the 50 SMA. So right now SPX and SPY are coming into their over under level, which basically means they're going to have to hold support here. If they don't, we could start triggering new reasons for the markets to be bearish. The initial bearish perspective for the open was to, again, pull markets back to their support over under. Now the market gets to decide if it's going to stay positive or not. Since the volatility index is positive, I'm assuming the markets will end up breaking down this 50 SMA. But again, like I said, we will see. But yeah, anyway, so that's why we had picked the SPY to pull back down well, actually, we need a little further maybe on the SPY. I got that level a little wrong. It's actually 66364. Right now, we've pulled SPX down to its level, so see this. I'll zoom in, right? This is very finite analysis, but again, you can see 50 SMA. Price point here, 6,000, 6 something. All right, we're going to go into a 1 minute. You can see where is market pulled back to from the open. So market opens, pulls back here because that's the 50 SMA. This dictates uptrends or new downtrend. So we've essentially pulled the SPX back to support. So that's current temporary S&P 500 support. Essentially, yeah. So now it's about SPX holding this level. If it doesn't, it breaks down. You will see the SPY trade down to the price of 66364. So yeah, it's pretty much that. Not too much more to say there. I mean, actually, there's quite a bit more to say there, but yeah. So at this point, like I said before, good chance we're just gonna see, see. Again, it really just depends, right? It's all about the low. So the low that was put in from SPX there, you see how it's kind of starting to bounce a little bit. It's nothing crazy, obviously. It's like a half a candle, but yeah. Anyways, that's SPX down towards its over under support. And now if SPX breaks down its 50 SMA, as you see here, then we're gonna see SPX trade down to 66364 next. And like I said before, I I don't know, have some suspicion that we're going to end up breaking down and kind of starting a new sell move. I look at SPY. I mean SPY SPX for futures. It's all. I mean again, if you so right now this morning we used both SPX and we've used both SPY to assume that the first move today was probably going to be a pullback down. Right? So if you go and look at the ES futures, what are the ES futures doing? They're probably pulling down. I haven't looked at the futures one time this morning. All I did was look at SPX and looked at the SPY and kind of came up with some levels that we would assume prices would pull back to. If you look at your futures, I'm assuming, well, I'm not assuming, I already know, your futures are pulling back, right? So we've essentially analyzed the S&P 500 market solely today, and as a result, your futures are obviously trading in the same direction. So to answer your question, SPX SPY both used this morning, and it wasn't to dictate how futures would move. It was just to kind of look at the markets and assume how markets are going to move. So again, we're going to pull the markets down here most likely, and it's going to go to 663.64. We just hit a low of 663 and whatever, I don't know, some change there. So a little more to go there. Again, at this moment, there is really no point to being bullish in the short-term trading environment. Again, that's because the volatility index is positive. It's telling us that I know I'm kind of repeating myself, but I know there's maybe a couple of you that are newer in here, or new into the stream for the past couple minutes. But again, this morning, the market flipped levels that could send it back to positive and run it up, but the volatility index did not confirm that. So the volatility index was actually telling us we needed to be kind of bearish to start the morning and then see if the markets are willing to develop into a long, or if the VIX were to break down. But right now, the VIX is continuing to hold its uptrend, which tells us that the markets aren't ready to be kind of full-blown long. So that's why we were able to pull the markets down today to start. Now the markets are having their opportunity at 66364 or whatever to basically hold the markets, which I don't think they will. I think they're going to continue bearish anyways at this point, just with the way the VIX is moving. And then we're going to see continued selling on this day. So we'll see. Now remember, right, so I'm going to bring up the 30-minute chart real quick, because I know when you're looking at my screen right now, you just see lines, right? But that yellow line where it says pullback over under, that's derived from here, this 30-minute chart, and this regular trading hours function. So you see how I'm moving this? And it's really just overlapping that 50 SMA. So this yellow line, or our pullback over under target, really is just a simple moving average. And the reason, essentially the reason we use that as a target this morning is why? Because if this SMA dictates uptrends and downtrends, right? Yesterday it broke down, and then by the end of the day it back tested, and then through the overnight session it broke up without a back test, so we just brought the market down to back test, right? And now it's going to decide if it wants to stay positive, and if not, then we're just going to flip it negative and we'll continue selling the market. So really what you saw this morning, that pullback, I would actually categorize that as a back test, right? So we were really trying to back test certain levels that could dictate uptrends, right? So we were really doing a back test, and that's why we're pulling the markets down. But to have the confidence or the conviction of pulling the markets down, we used the volatility index. Volatility index was in an uptrend, and it still is. So if the VIX is uptrending, generally markets aren't going to go up. So if the market just started a potential uptrend, but the volatility index is saying it shouldn't go up, then again, that kind of causes that scenario and environment today where we could pull the market down to back test previous levels. So again, we're on the pullback over under. This would be essentially what we would call first sell target on the day complete. So first tradable bearish. That's not entirely true. The first one would be the VWAP and the SPX, but essentially we've completed our initial morning pullback trade idea. Okay? Now it's about whether or not the markets get continuation on to the downside from here, which again I think they will, but that's what's under development right now, is if the markets will allow, or if the systems and the algorithms and the computers and the ones that really control price action of the market, now it's up to them in that game, and if they're willing to allow the markets to go into a sell signal or a breakdown. If so, this is kind of the starting point of a new breakdown. If the algorithms and computers aren't quite ready, this is going to become a temporary bottom, okay? Which I know I just pretty much told you things could go up, things could go down pretty much, but yeah, I mean that's really just it. So this is, again, we're right on the level that can dictate macro swing short and or the start of a macro swing long. Just remember that. The same level, which is the one that the arrows are pointing to on the screen, that 50 SMA, essentially. This is the level that dictates whether or not the markets will stay or start macro swing short or a macro neutral environment, or if they're going to basically, start an uptrend. Again, like, ready? So last night, this was the breakdown. This was our breakdown. This was the back test. Over the after hour session, this was the break up, and this was the back test. So if this back test holds, arguably we start to rally up, right? If this back test does not hold, then we're going to start arguably a downtrend, right? So that's what we're basically doing right now. We're bouncing this. We're just bouncing this temporary support. You can see how the market is starting to bounce a little bit there. Again, I personally think it's going to be temporary. I think the market will end up breaking it down. We'll find out shortly, right? So we are correct on the pullback targets, right? But again, I don't think anyone buying this 50 SMA or buying this potential hold level, I don't think it's going to work personally. I think it's going to break down. But again, at the end of the day, my opinion's my opinion, right? But so yeah, just trying to emphasize the main reasons why there. So yeah, pretty much that's that. So hopefully you guys learned a little bit there. All right, again, markets are continuing down. There's no surprise. Well, when I say continuing down, it's really just like one candle. It's nothing too, nothing too crazy. Again, we do got, 1 second. Is that correct? Yeah, I mean, there's even levels that, point that SPY could be going towards, 663 on the day. Obviously, that would have to be with a legit breakdown. So, 663's potential. Also, kind of looking at this ATCH penny stock right now, I think it arguably has room up to the price of 91 cents, maybe even as high as 80 cents today. It's trading about 60 cents. Again, it's just one of those ones. So this is what we were talking about a little bit yesterday, how stocks that are popping up on the biggest gainers can be stocks that are in downtrends, but they're going through counter bounces. So again, ATCH just kind of looks like one of those stocks that it's going through a counter bounce, and that counter bounce has room as far as like 80 cents or so, arguably. So just an FYI, don't shoot the messenger if things are not totally perfect in that front. But again, you can learn from ATCH. ATCH, again, is an example of a really cheap penny stock that's been in a downtrend. It's currently in a downtrend, but it's bouncing, right? So what we're doing is we're taking a oversold market in a downtrend, and we're bouncing it. And we're taking it back to levels that dictate uptrends and downtrends. So really the same thing we just did with the market. You know how we pulled the market down to like 663.60, and we're like, yeah, we're just back testing previous previous levels that dictate uptrends. This is what we're doing with ATCH currently. We're running ATCH up because well, it's in a downtrend, so it's just really running it up to back test, and I'll show you here in just a second. Yes, I mean, I just put it, it's a very small trade with ATCH. I've made about 5% on this position I've taken. It's nothing crazy. Locking a little bit on the way up. Now it's pretty much a free trade. So yeah, like if you look at ATCH, I'm going to bring this down real quick. So again, this is just, again, I just want to do this very fast. I'm not saying it's a great stock. I'm not saying it's a great play, but I'm just trying to emphasize, right? So this was an uptrend. Market goes back to the trend. Market breaks down the trend. Market back tests the trend. Market enters a bearish market. Today, ATCH starts coming up on the biggest gainers list. I see that we haven't back tested the trend since the breakdown. So this is the breakdown, then this would be the back test, and this would be the start of the downtrend. So this would be arguably attempting a back test, right? So I would say ATCH again is just on the biggest gainers list today because of we're doing a back test, and it looks like we're using the 15-minute chart for the long, right? So if you look at the 15-minute chart on ATCH this morning, it again just looks like the long might be getting triggered by a 15-minute algorithm here. So the 15-minute uptrend start is at about 53 cents. So it looks like we're using a 15-minute uptrend to, as best as possible, back test the 30-minute down. So you can see how the 30 minutes down, but if you look at the 15-minute flipped up. So we're basically doing a 15-minute long breakout to then back test as close as possible the 30-minute downtrend here, which is right there, which is nearly complete, you know, and or maybe it's going for a 4-hour trend back test, which would be as high as that 91 cent area. So this is essentially a counter bounce on an oversold downtrending market, if you will. So again, that's something that we'll see from time to time. Anyways, the 663 price on the market has been hit. The market is tanking. Again, you are full-blown bearish at this point on the market, obviously. You are not long bias. You're either full-blown bearish or you're neutral, but you're not long bias the markets by any means. All right. We'll get into some finite. So pretty much now this is the way this is going to work. Again, I can tell you right now, you're not bullish, obviously, which we haven't been bullish all morning, really. We've been talking about the market pulling back. Anyways, so the breakdown is here and here. So this is pretty much an additional strategy that we're going to add on top of this market here. So we are taking the volume weighted average price and we're going to anchor to the breakdown levels of the market, which are pretty much where I'm anchoring. And now we will have this new saying, which is going to be the market as far as momentum is concerned. Momentum, right? So momentum stays bearish below these VWAPs. So now what we're doing is we're saying, okay, the market has broken down here, so we're bearish or neutral. The volume weighted average price of the breakdown is identified by these VWAPs, right? So we're taking the volume weighted average price of the breakdown and we're creating a bearish volume trend down. So essentially, this would be counter pop retrace expected levels, and then also as long as market's below that, it stays bearish. So my assumption based off of things that I'm looking at, and I guess you could say my opinions, is that market is now in macro bearish to macro neutral. We're not really bullish. Anything discussed bullish is simply counter pops in a downtrend. But I do think that currently we have potential for the markets to push back into this green zone, and then you would look to still be bearish, you know, into that area. So yeah, anything popping back into here still has the potential to be downsided. Mind you, remember, during pre-market and into the open, so when the market was trading here and here and arguably here, we had mentioned we're going to pull the market down to about here, and then once we get here, we will then see if the market wants to hold, and if not, it goes into a breakdown. All right. So remember that the whole kind of bearish scenario and forecast started in the pre-market, right? Right now, how we're talking about, hey, if the market stays below these VWAPs, it's bearish, right? Well, we've already been kind of bearish sentiment, and now we have a new reason to be bearish here with the breakdown, and now we're just taking the old reason to be bearish, creating new reasons in the future. So just saying that the sell move's already kind of been underway for a little bit. The volume weighted average price trend is just something that we add on top of this current move to see if we get continuation of it, essentially. Yeah. So we're completing T1 of our counter trend move here as identified by the green box on the screen. The low side of that green box would be T1, the middle of it would be arguably T2, and high side would be T3, which is really just me taking these VWAPs here. So I'm essentially just taking specific candles that I like from this breakdown, looking at the volume weighted average price moving forward, and knowing that everyone who sold this move down has been popped back to a key VWAP. So again, like anyone who chased this move down just got taken out on that pop. And that's the objective of the market many times, is for people to chase, counter pop them back to their volume weighted average price and stop them out. So that's what I would say we're pretty much doing right now. It's just a counter pop to stop out some traders and arguably still try to work it down into a bearish move. To be honest, even though the markets are selling down, the market internals aren't extremely bearish. So it's not even, and it could change, obviously. Always, things can change. But, yeah, currently, we're not actually seeing a ton of aggressive selling participation of the market. So yeah, let me show you. All right, so if you're looking at this here, this is just the market internals page. So we got the NASDAQ, S&P 500, and Magnificent 7. So the only thing really selling off on the day is the S&P issues. Everything else is actually up to flat. So we've started up here. So there's some selling going on right now. But if we look at it from the start of the day, most of the underlying issues of the stock market are actually like neutral to flat. So this isn't what we'd actually say is like an aggressive sell move or breakdown. So it actually kind of leads me to believe that we could still maybe pop this a little higher. But anyways, yeah, this isn't the selling on this breakdown is not extremely aggressive for the moment. Now, if every single one of these market internals was selling downward, this would be far more aggressive. If we look at the Mag 7, you can see the Mag 7 are pretty much flat, right? They started up and then sold off, and now they're just flat. So a lot of the major market cap stocks right now aren't even selling off. They sold off and they just been kind of flat. So, your biggest market cap stocks, which, a lot of times run the markets up or down, they're not even really getting yanked that hard. So this tells me what? This tells me that if they start to sell off, then this market obviously is going to continue. If they kind of hold and start to bounce, then we're probably going to bounce this a little more, right? So it's just one of those things that if these were selling off more, the market would be selling off harder. So you can kind of think of a future scenario where, well, yeah, if these start to sell off more, then markets sell off more, etc. Mike Stanley, hello, brother. Hello. Now, that being said, regardless of all the stuff I just said about the market internals, you're still not bullish, right? Like I said, we're not bullish. Bring up this 30-minute, right? So for those of you on the stream, we go back to swing long. We'll say that. We're swing long when the market gets back above this 50 SMA. Right now, we are either swing short or just neutral, meaning, so this is all in relationship to like swing, right? So, but also day trading as well. But the only way I can say it is your long bias sentiment above and your neutral or bearish below. That's it. Again, can look back in the past a little bit to get an idea, right? So when above, we are sentiment long. When below, sentiment bearish, right? When below, sentiment bearish to neutral. All right, when below, sentiment bearish to neutral. So I could keep going back. When bearish or when below, neutral to bearish, right? Exactly. When below, neutral to bearish. So right now, we know that the market is starting to come down into that level, and we're below it. So like I just said, we are neutral to bearish. All right. We'll only flip back to bullish sentiment when market is above here. So yeah. That's pretty much it. This is where you start looking for the news to shift to bearish. You know what I mean? So like, obviously the market has broken down. I don't foresee us getting back over today. I think the markets will continue down. I think we're just gonna have overall bearish selling, or just not anything really bullish. And again, if this continues into tomorrow or whatever, then we know the news is going to flip into bearish on Google, right? So yesterday, Jerome Powell was talking. We went into a downtrend a little bit, so markets start. Well, actually, yesterday the VIX was kind of breaking up. Markets are pulling back, so they said, "Oh, it's Jerome Powell's fault because he said all this stuff about inflation, so that's why the market's down." So, but yesterday we started to break down, right? We broke down the 50 SMA yesterday, so we started to get some more selling. Today we're breaking it down again, which is creating selling, which is causing things to go down. So we kind of already know that later today the news is probably going to be like, oh, well, what's the market down right now? The market's down, not even, what? Is that right? 0.0, oh, well, if I'm looking at that, I guess. Yeah, it's only down 0.06%. That just doesn't seem right. Well, I mean, I guess from, yeah. Yeah, so again, we're down only 0.06%, but it's given back a lot of gains from the move up. So again, you can kind of already see the news is probably going to be something like, stock market gives back gains after Fed Powell talks about inflation or something. Or it's going to be, I don't know, didn't we have housing? We had housing data come out today as well, which I wasn't even really paying attention to all that much, but I know we do have some housing data here. Wait. What the? Something's weird. We did not have this much data this morning. Like, whatever I looked at this morning did not say this, but yeah. Anyways. Mortgage data, new home sales, that was at 9:30, 10:30. So we're pretty much through all that stuff. But yeah, so the news is probably going to be something like, oh, new home sales, I don't know, something blah, 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 market scared and down. So generally speaking, whenever the market again goes into a downtrend and starts to sell off, obviously the only thing the only thing the news can say is, oh, equities are down and equities sold off, right? So it's when you start to know where that transition in the markets are going to be, you can start to kind of plan for what news headlines are going to look like. And again, right, it's like, obviously, if the markets are entering a downtrend and they start to sell off, then clearly what the news is going to look like. So that's kind of a cool aspect of, kind of learning when markets flip from bullish to bearish, how you can start to see how the news world is always delayed, behind, and whatnot. All right, so again, remember we're talking about looking at the market internals. You can see here a lot of the NASDAQ is not selling down. Some of the S&P issues are no longer selling down. A couple green candles here on the FANG. And so, again, all that little couple green movement on the issues is causing that little pop that you're seeing here on the market. So you're just getting a little bit of love into some of the other markets there. And then again, we are coming into kind of, there you go. So there is T3 of our counter trend micro retest complete. So that's all done. I would say, not what I would say, that's pretty much it. If the market doesn't find resistance here, then there's a good chance we're going to see the market squeeze all the way back towards 663.61. So we could be looking at a reset trade here that takes the market towards 663.61. If we go up and hit 663.61, again, this is what I would just call I just classify this as a reset long. It's pretty much, it's just a back test. We actually had this kind of scenario yesterday too, a little bit. Yeah, I would say now, as far as micro stuff goes, we have pullbacks to here. I'm just updating this as fast as I can. Hello. Yep, so it's actually kind of, the way this is set up, it's actually kind of goofy. Where he back tested that guy. Yeah, I mean, I hate to say it, but it's kind of the way the pullback targets right now would be pretty much what we just did all the way down to that box. So this is kind of like, that's kind of it. Again, just kind of re-added some text there on the screen just to emphasize again, any longs are counter trends in bearish trading environment. In a bearish trading environment. Mike Stanley, what up, brother? Hello, hello. Hello, familia. Do, 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 do. Okay. Yay! Yippee! Wahoo! Bitcoin. Yeah, I mean, we'll see. I don't know. I mean, I guess I do know. Yeah, essentially, the way I view this is with Bitcoin here. Again, pretty much as long as price is accepted above 112,500 or so, then again we can rally towards 114,000. Any questions? Any questions about today's forecast, today's analysis, why we suggested the market would trade the way it did? Anything at all? Or I guess you guys are all pros at this point, most likely. So, you know. Don't really have a ton to say. This little, I see what they did. They used the freaking SPX market. You little schemers. You would. Thanks. Well, what up, Wes? Hello. Cheers, brother. So yeah, I guess let's get a, well, I guess I don't know. How do you even do polls? I didn't even know you can, how you just participate times. I don't know what I just did. I just timestamped something. I don't know why. Whoa. I don't know why that's so weird looking. Top chat, live chat. Oh, I see. That's cool. Anyways, just released a little question there if you guys want to answer that. If not, no big deal. No big deal. What is this? Alrighty, again, not a whole lot to say here, folks. I mean, yes, you can see markets are going up. We already talked about this, resetting the markets towards 66361. We were talking about it on the previous pop, which arguably a little too soon because it still had to pull back once more. But just in general, right? I mean, the only way I can really explain this is it's pretty straightforward, right? I'm going to go to a regular trading hours chart, and it's, well, yeah. It's just a back test, right? So if you look at the chart here, I'm going to zoom in. There's a lot going on here. I'm just going to try and make it somewhat. I'll look at that, Steve. Yeah, so if you look at this here, again, so, well, it's just the back test. I mean, really, you can see there's the 50 SMA, right? So what do we do today? We broke down. So the market got bearish. We've been trying to hold it down, and it's just the market's not strong enough to sell off, right? So the market does what? It comes back up to the 50 SMA, right? So essentially, I mean, it's straightforward. Anytime the market breaks above or below the 50 SMA, if there's not enough momentum to continue carrying it in that direction from its breakout or its breakdown, then it usually ends up resetting it, right? So, we saw that this is it. So we just saw the same trade example like 2 times in a row today. So let's go to extended trading hours. Ready? Watch. So let's see where the 50 SMA is at. So ready? Watch this. We just saw the same trade 2 times over. Ready? So this morning when we're saying, hey guys, we're going to look to reset the market down to the 50 SMA. So the market was up here. It had broken out. So this would be, your breakout. Okay. There's not enough momentum, and the volatility index says it's not ready to be a big long. So what do? We pull the market back down to the 50 SMA. All right. What did we just do today? We pulled the market to the 50 SMA, and then we broke it, which means we're neutral to bearish. The market breaks down and goes bearish. But there's not enough momentum to continue selling the market. So what do? We oftentimes reset the market back to where? The 50 SMA. Granted, we haven't hit it, but we've gotten it back to 66350. The 50 SMA is 66364. So there's another 14 cents there. But you can see the logic, right? So again, this is the breakout. Not enough momentum to keep going, so we reset the 50. Then we break down, not enough momentum to keep going right away, so we reset back towards the 50. Granted, since the market's still below the 50 SMA, this is still a macro bearish environment. We'll only flip back to swing long or bias above. So this is all still counterbalance back to potential resistance down, right? So don't for a second think that we're back to bullish the market. Again, we're just doing a counter long within a bearish trading environment. Or macro trading environment. Okay. So you essentially have seen the same trade setup 2 times in a row today, which is a back test. It's not really the same trade setup. It's just the logic of a back test, right? I mean, anything that breaks out, right, has to keep going, or else it resets. Anything that breaks down has to keep going, or else it resets, right? So kind of like basically, trading 101, breakdown, back test, breakout, back test kind of thing. All right, so NRXP. Yep, NXRP did start an uptrend today. so far there's not a whole lot of interest. But it doesn't mean that won't change. I mean, the risk is pretty limited there. Pharmaceutical stuff. I mean, yeah, right now you have about 4 or 5% downside risk for that uptrend start. So it's not bad in the sense of like risk reward kind of jam, as in there's not a lot to risk to be long the market there, because your over under is only like 5% away. So, but yeah, I mean, it's as far as that goes, yes, it did start an uptrend, got about 5% down to whatever the over under. So it'll be interesting to see if that plays out over the course of the day, maybe the next day and a half or so. See if it gets really any love. I mean, yeah, like NRXP. I think if you take, I don't know, you can. I mean, yeah, you could probably be long that one. Again, stops are gonna have to be below like that 290 area. But yeah. XPON. Is this doing anything? Zone, ZONE. So this has been coming up the past couple days. The 15 minutes in an uptrend. So this zone's kind of interesting. So like, yeah, this one, I don't know. Downtrend there. It's maybe I thought this popped up the other day. Maybe not. I mean, here's another one. It's kind of like we'll see. I mean, it's one of those ones where it's kind of it's odd but also interesting, right? So you can see here with zone, all right, this little penny stock today. It's broken out over the 15 minutes, so the 15 minutes positive, and it just broke out over the 30 minute here. So whether or not that is legit and gets acceptance, we'll see. It's kind of not the greatest chart pattern, but I'm interested to see if this ends up having any love. So you can see right here, the market on zone is just now starting to come through that 30-minute 50 SMA. So we'll see. 30 minutes starting to go positive there. If it gets love, then great. If not, we'll find out. But yeah, when we look at zone and we zoom in now here, we see this, which is yeah, so obviously the stock blew up today over the 30-minute. It's now sold off all the way down to the 30-minute and arguably recovered the 30-minute. So pretty much the way it's going to work is this has the potential to bounce as long as it's kind of maintaining above. If, and then the risk here would be this doesn't bounce, right? And that 30-minute break is false, and then the market's going to sell back down to 223, right? So it's essentially the risk is back to 223 here, but it will be interesting to see if this somehow creates like a bounce on the day. It'll be, again, It's simply just, again, it's all I'm saying. I'm not saying it's the greatest stock in the world. I'm not even saying it's a great setup. I'm just simply saying there's the market on zone is starting to come up through that 30-minute right there. So if it gets acceptance, then maybe it starts an uptrend. The only issue with this too is it's just how steep it is. You see how steep that downtrend is. So a lot of times you like to see this more flat, but anyways, it'll be interesting to keep tabs on zone for the day just to see if that ends up getting love through that 30-minute. That's another one that's kind of on the radar now. Oh gosh. All right, I'm bringing up this stock again, ATCH. That's that little penny stock we talked about, watching this kind of long up today for a counter bounce towards the 4-hour to 30-minute SMA. The 30-minute SMA calculation, kind of that we're talking about targeting, has now calculated down to 78 cents. We just hit a high here of 73 cents, so we're about 5 cents off from that target completion there. And actually, it looks like we just started a new 30-minute candle, so now the calculation for the long target there on ATCH is now 77 cents, about 76 cents, so 3 cents away there. So arguably ATCH coming into that resistance area now, not really, after we had that pullback and then dip, press back again, you can see when we bring up this chart, that we're pretty much done trying to press this market up on ATCH. Well, it's not entirely true, but again, gonna zoom in here. Like we said before, you can see we were looking for a counter bounce back to the bearish 30-minute SMA trend. We were able to take the market up as high as 73 cents. SMA was 76 cents. So 3 cents away there. Not that it can't go get it, not that it won't go get it, not that it couldn't go higher. But again, that's just how that works, right? So if we take a quick peek here, go back to the 15-minute, right? So if you think about it, where's the 15-minute uptrend start? 15-minute uptrend starts here. Where's the next, to me, important moving average or trend? It would be here. This is the 30-minute. So essentially, this is a common theme of the market. When the 15-minute goes positive, we run the markets to the 30-minute. All right, it's a trade that we'll see time and time again. So, anyways, cheers. Bitcoin currently going up a little bit. No surprise there. Really just trending in the direction of our counter long targets. Yeah, I mean, yeah, absolutely. See, I mean, you don't got to do anything with it anyways. NR, what was it? NRXP. Yeah. Yeah, I mean, You don't have to do anything with it at all, right? But I mean, just in general, right? Definitely something to watch, keep tabs on, just kind of see how it plays out, for your own sanity, if you will. I'm gonna bring it back down just so you can kind of see. Remember, when dealing with this particular strategy that we're talking about. I mean, you're really competing with computers. Really, I mean, you're always competing with computers, but the strategy we talk about is look for stocks that are in uptrends and then buy into their uptrend support. So if you look at NRXP today, right, we're not looking at the pre-market. This is just solely previous day into today's open. From today's open, what did the stock? Well, we know that in the after hours it blew up, right? It did whatever. And then what? And then at the open, what did it do? It pulled back into the uptrend support and then it went long. So there was already a 7 to about an 8%. Well, no one would have caught. I mean, from low to high, there was a 7% return on that trade, right? So in terms of NRXP was one stock today that went into an uptrend and then had a buyable opportunity at support. And the best case scenario so far is it gave you maximum 7% return on your investment from the uptrend start. And from the uptrend back test. Now, did this end up being the greatest play for the day? No, but it did exactly as you would like it to do. Hit support, hold support, go up, and you make 7%. Now, if you can extrapolate that and hit that, trade on multiple stocks for the day, great. Maybe you only get one, maybe you get two, maybe some days you get three. And out of those three that you get, one might go 7, one might go 50, one might go 100, right? So you're basically spreading your capital and your bets across multiple different stocks that may be popping up in the day and having these setups. And you don't know which one's always going to be the best, and you don't even know if the one you're picking is going to do well. But if you spread that amongst enough bets, you're going to be right more than you're wrong, in theory, right? But that's pretty much it. So I think NRXP had a great trade today. I wouldn't say it's great. I think it had a decent trade. I think it was great in the sense that it respected its markets, it respected its trends. Did it have amazing follow through? No, but the trade did work, and the strategy did work. There was actually one that I'm actually kind of frustrated on was V. So I actually took a long on V last night and then wasn't really what the heck am I doing? I need to go to an after hours chart. Yeah, so I had taken a play on V actually the last night of the after hours session, and there's really nothing I could do about it. So I was like, you know what, this one has potential to go higher. So I ended up buying long in the after hours, way late, way up here in the highs. But I'm like, I think this one can go up. Sure enough, overnight it spikes up to 415. I bought this one in my Roth account on Thinkorswim. So at 4 o'clock in the morning when it's blasting off and I'm up, 30, 40% on the play, I can't even do anything with it because, it was bought in a Roth IRA. So I can't trade at that time on TOS. So pretty much this spikes, can't do anything about it. Then I take it off for a loss in here. And then we actually had a good trade setup and I just wasn't following it. So this right here, this bottom, that was a tradable long setup. And because it's the uptrend test. So if I show you here, Chris or Steve and anybody else paying attention. So there's the long setup. You can kind of see off the 4 hour. So, right. So take this one back here. See how the market was. It's actually 3 great examples here. Ready? So market breaks out. Then it drops down to the 4 hour, and then it has a good bounce. Right? Market breaks out, drops down to the 4 hour, and then there's your bounce. All right, and then here, market breaks out, and I bought it last night. Couldn't sell on the spike, obviously, because they usually that's how they like to do it. They like to blow up things a lot of times when people can't participate. It's just it's how the rigged market works. And then again, this crashes all the way back down to where 246, and then there's your bounce. So far this has had about a 6% return on your investment from the support uptrend, which is right here in the yellow, right? So again, you can see that. Zoom out, go to this 4 hour chart. yikes, where are we at? Oh, there it is. So again, yeah, you can see clear as day. Yellow line overlaps 50, go into smaller time frame that you'd actually be looking at for trades, and then there you have. You have the market does what? Sells off to 4-hour support, first tag bounce, and then you have double bottom at 4-hour uptrend, and then there's your rally for a, well, actually from the low there is about a 10% gain. So you had a possibility to return 10% on your money with buying into the uptrend today on V. I didn't even do it. I missed it. But yeah. Cheers. And that, ladies and gentlemen, is pretty much how you can go about finding potential 10, 20, 30% return on investment ideas each and every day in the market by using the biggest gainers list and just taking your time going through and being patient and looking for things that are actually at the right levels, or identifying different stocks you'd have to wait to get to those right levels. And that's how you can, start getting, a couple percent here and there in appreciation on your investments and capital in the penny stock world. Market's just basically chilling, not doing a whole lot. So, whatever that means. That was a missed opportunity for sure. Zone, Z-O-N-E, now up to 238. Nothing crazy. I mean, it's really nothing to write home about. See, here's another interesting one in real time, which is CDLX. So ready? Let's look at CDLX together, guys. Yeah, everybody. So let's look at this real quick. So we can see the other day, CDLX does what? It breaks down its 50, and now it's doing what? Bouncing back to its 50. So CDLX has had a good long move, and it's just now starting to get positive over its 30-minute 50 SMA. So if we go and zoom in here on this chart, right here, let me just double check, 30-minute and the 4 hour. Yeah. So right now, CDLX is trying to get positive over that 30-minute, right? So what we've already seen in the micro is we've seen a break above. Right? So there's your break above. And then there's your back test, and this is your initial attempt to go long. So there's been an 8% return from the start of that 30-minute uptrend. So again, this is another one where it's kind of like, it's interesting. We're starting to kind of break above that. It's not my favorite setup in the book, if you will. Sometimes they kind of work, sometimes they don't, with the way this is looking, but yeah, so again, not my favorite setup. Is starting to get positive a little bit. I have no position on this. This is just something I'm seeing right now that I figured I'd mention. So what I want to do is at least kind of teach this concept, right? So if this uptrend fails, what's it going to do? It's going to fall directly back to where the uptrend start is at 240, right? And then obviously for it to go lower, then you'd have to break this down, right, etc. So it doesn't seem like it's that much what we're explaining, but I mean that's pretty much the reality. We have this 30-minute market here. It just broke up. If the 30-minute trend break isn't strong enough, right, then it's going to reset back down to $2.40. Generally speaking, or this 15-minute. And then also the previous uptrend before that I think is of importance would be the 15-minute, right? So CDLX essentially, for whatever reason here, got news, got something, and it started breaking up. The 15-minute went positive. Remember ATCH today? Remember we said with ATCH, when the 15-minute breaks out, we look up to the 30. So again, here's CDLX, 15-minute breakout. Breakout goes to 30. 30-minute broke out, back tests the breakout, pushes up, about 9%, still holding positive. So we've gone to a 15-minute uptrend. We're trying to do a 30-minute breakout, if you will, and hold above. Obviously, if we don't, failure would be back to here, right? And if we do like a 2-leg breakdown, then arguably break back down to the 15-minute and then try to bounce the 15. So those are your kind of two levels of importance right now, is that 15-minute and that 30-minute that markets are transitioning through on CDLX. Really the point is just to kind of emphasize more of the system and what you guys are looking at. Zone, Z-O-N-E, is now up to $2.40. Not that that's really all that crazy, but again, this was one that we mentioned just a little bit ago, how if it's getting up through the price of $2.23, it can very well be starting one of those 30-minute uptrend moves. The setup's a little goofy, but arguably had a little potential. So again, you can kind of see right here how the market initially pops up to said SMA, pulls back, then puts in a green candle. The green candle establishes itself over. We mentioned a little bit on the stream about how it could be coming up through that uptrend. And now the market is up about 8% from that uptrend start. So decent return on capital if timed correctly over that SMA trend. You're getting a 7% return on your money. I currently have returned about 5.67, 5.7% return on that move. So I haven't gotten the 7% because I didn't really get the absolute break spot, but I got about 5% so far in this long. So not bad. Or almost 6%. and closing out on the way up. So now pretty much down just to my hold size. So with ZONE here, I got very small position left. If it goes up and booms, great. If not, it doesn't even matter at this point. So again, was this a great setup? Not really. Did it have potential? Yeah, so took a little stab at it. And that's kind of like what I was looking at with CLDX there, or CDLX, or whatever I was just talking about with CDLX. It's another one of those where it's kind of like, we'll see. But so again, you can already see right here, if we go look at the 1 minute, back to the 1 minute or a minute. Obviously, CDLX is pulling back to the price we said it would probably pull back to. So if you guys look, ready? So, and again, it doesn't really look like much, but again, you can see this is the 30-minute attempt, push, now pulling back to the 30-minute. This is the breakdown, right? So this 30-minute is the over-under, right? If you're going to see one of those big red candles come in, I don't even say big, right? But you just know, think about the people that buy into moves. They buy the move up really high, and then they're like, oh, is it going to break down? I'm going to hold it a little longer, and then they get that candle that goes, you know? That candle happens below the price of 240, right? That red kind of stop out, that candle that takes people out when they're buying into a high, that can happen, but it only happens if the market A wants it to, but B below the price of 240. Otherwise, the market will stay supported and it can kind of hold up and arguably even rally higher. Again, it's that 240 is the over under right now on CDLX, and again, that's just yeah. So hopefully that makes sense. Hope you guys learn, and cheers. Yeah, I do look at that. It actually, they're usually, I might have goofed up my time frames, but yeah, I do look at that stuff. It's all the same thing, right? So if you're looking at the weekly right now, you can see that the weekly is coming into that, or the price is coming into that weekly 247, 248 weekly 50 SMA. So we would call that the weekly back test. So I'll bring this down, right, real quick. But yeah, I look at all the time frames. I look at weekly, I look at hourlies, dailies. Sometimes I look at 2 hours, 3 hours, 5 hours, but usually not. So that's just to kind of emphasize I do look at a lot of different time frames. And something that kind of really helped me was when I look at the time frames, I kind of learned to just say to myself that every single time frame is the exact same thing, just, whether smaller or longer. But yeah, I mean, if you look at our SMA, kind of concept, if you will. So when's the last time this market on CDLX went into a downtrend on the weekly? Right here. So the weekly went up, it tried to go over, and then it came back below. So I would call that the start of a downtrend right there. So the market's downtrending the weekly. So the last breakdown has yet to do a back test, and here is your back test of the last breakdown, right? Which is the same thing that we just did, on the 30-minute, right? So if you look at the 30-minute, when's the last time the 30-minute on CDLX broke down? Just the other day, right? So the other day it breaks down, no back test, here's your back test, right? So we just saw that take place on the weekly scale, right? So the weekly scale just did it too. So every single pattern and setup that happens on a 30-minute, a 1 minute, or an hourly is the same thing happening on a 2, 5, 6, daily, and weekly. The weeklies have uptrends, the weeklies have downtrends. The 30 minutes have uptrends, the 5 minutes have downtrends, etc., etc., etc. When it comes to actually using them, though, for trading purposes, we normally look at 15 and 30 minute as that time frame that's not too slow, but it's not too fast. That gives us enough time to capitalize on a move, but not be too early and not be too late. So we generally kind of look around that 15 and 30 minute, and I'm sorry, that 4 hour, as it relates to penny stocks and stuff. We're generally kind of looking for that 15, 30 minute, 4 hour transition, and so on and so forth. But yeah, we look at the weekly too. Bitcoin, hey guys, look at Bitcoin. Anybody know why it's going up? Anybody? No big deal. If you guys don't, it's all good. But yeah, you guys can pretty much expect Bitcoin's going to go up into about 14,200 to 114,600 as per suggested this morning in the stream and yesterday during the stream. Yesterday we also talked about our counter long targets being about wherever I just said 14,000 something. So, cheers to that. Everybody. See, this is what had happened was, see, a couple weeks back, we're just gonna go through this real quick. I'll just go to the daily. Here we go. So, a couple weeks back, we had mentioned you have a counter long target on Bitcoin to here, pretty much. Then you're going to look for resistance. So then we get the resistance. And the resistance drop should go to basically here. And just yesterday and into today, we said now the counter trend long target's probably back to 114,000. So again, we have completed our weekly long target. We started our weekly resistance short back to daily trend supports. And now we're doing our daily trend counter long move back to 114,000 to 114,500. Okay. I am you. He is me. Him, you, me. Everyone's getting their ass whooped. No, I am you. Who is you? You is deaf. No, you is blind. That probably is one of the best scenes ever created in a movie. You is deaf. No, you is blind. Who? Me? I am me. I'm me. Oh, gosh. All right, I'll be right back. I'm going to go get a coffee, do some stretching, maybe a couple sit-ups. I don't know. Alrighty, we are back here, ladies and gentlemen. Alright, I kind of want to bring up zone for a second, right? Or wait, yeah, the other screen. Alright, so again, we're coming and looking at zone. Why we're doing that? Because we're looking at, this previous kind of setup we're talking about with zone. So we're talking about how it's kind of coming up and through that SMA, so it's kind of bouncing a little bit. Not the world's greatest setup, right? But anyways, let's go in here. So let's look at this bounce, right? So zone recovers the 30-minute trend. So 30-minute goes positive. We're able to rally it up for about a 10% gain. And then the market does what? Resets back to where? The uptrend level. So on a 1-minute chart, it doesn't really look all that crazy. But again, when you zoom out and go to the 30-minute, you'll see exactly what it is that we're doing. So we essentially did a little bit of a 30-minute bounce and then did what? Then reset the market back to the SMA. See, yeah, I mean, most computers, high frequency trading, I don't want to necessarily say high frequency trading, but as far as computers go and programs for buying and selling equities and what have you, the easiest way to program strategy and back test strategy and is with SMAs, right? So a lot of times, not a lot of times, just in general, you kind of see how the market moves right back to the SMA and it kind of bounces a little bit. Some of that could be, retail trading, but a lot of times, when markets are kind of moving, shifting, and tagging between simple moving averages, it's generally computers and programs. I don't want to say that as that's all that it is. But you have to understand that as far as programming and computer language and talking, simple moving averages are something that can actually be they're programmable. What I mean is, you can't program a bull flag, right? You can't program a head and shoulders pattern. There's so many different variations to a head and shoulders pattern or a bull flag, how long a bull flag would be setting up, how, there's too many variables and unknowns within a pattern that you can't really program or create an algorithm, around that. There's too much variance, right? But a simple moving average calculation is just that. It's always whatever the calculation is, right? And the simple moving average calculation is of the price, right? And over a set period of time. So set period of time calculation on whatever, whatever stock or equity. So that can be programmed into an algorithm, right? So, and the other thing is that a 50 SMA calculation on one trading software is going to be the same 50 SMA calculation on another software or another computer program trading brokerage, right? Sometimes there's price discrepancies, but usually the price discrepancies aren't too dramatic. But there are some differences between brokers and depending on how and where people get data and so on and so forth. So there are some discrepancies in moving average prices from platform to platform. But as a whole, they are the most consistent metric that's programmable across all platforms. Meaning, again, when someone's looking at a 50 SMA on the S&P 500 in China, and there's another guy looking at the price of the S&P 500 in the United States, and they both have a 50 simple moving average, there's pretty good certainty that they're both going to have a very close price point as far as that 50 SMA. But the dude looking at a head and shoulders pattern in China versus the guy looking at a head and shoulders pattern in the United States, they could be looking at very two different things. But they were not looking at two different things if they're both looking at the same SMA on the same time frame on the same market. That is a constant. So a constant can be programmed into computers. That's another reason why simple moving averages are obviously important too, is because again they are the one constant thing that can be programmed and back tested as it relates to algorithms. So cheers to that. So that's why you see things like you just saw, right? That's why you see that so cleanly, right? When you say, where's this SMA? And then you look at a 1 minute, right? So someone that doesn't know that, right? Someone that doesn't know that that's where the 30-minute trend is, and that obviously markets can do whatever they want, right? They could go up for forever, they can come down, but we clearly know that this knee-jerk reaction down right into $2.21 is simply a 30-minute 50 SMA open high low close trading system back test, onto, like we said, bringing up that 30-minute chart. So you see how it wicks down right to, and it's a penny below, but it wicks right down to 221. So again, we know that that's, there's some retail in there, blah blah blah, but that kind of action we're seeing, that's kind of computerized stuff. We know for sure that there's someone in the market today, and that may have been long on this. They got taken in that drop, right? Maybe even one of you guys. I mean, actually, I think I did too, right? Because I had a couple shares on. I think I sold into this or whatever too. So like even myself, right? I got a couple of shares washed into this move, and for someone who's new, they're gonna go, "Oh my gosh, that's crazy! Like, what's going on?" It is kind of an aggressive move down, but it's simply just a pullback into what we already know is the 30-minute over/under, right? So when I see that knee-jerk reaction down, I just go, yeah, I mean, it's really just a back test to the previous level that we used to send the market into a long there. So it makes sense, right? And it's right down to that SMA. Yeah, pretty much. So I mean, yeah, you can pretty much see that the market is not ready to be full bullish. It's still macro bearish, right? So if we take a look at SPX here, let's go to the 30-minute here real quick. We can see that SPX's price is still below said SMA level, so we're still at a neutral to bearish environment. As it relates to more of the swing concept, days, hours, we are still kind of on that macro bear side. Let's double check the SPY here. You can see the SPY too, pretty much to the back test though. You can think like, if we bring up zone, so look at zone real quick. This is zone, right? So let's look at zone real quick again for the 18 of you that are here. Hopefully you guys are listening. Sometimes I feel like I'm just talking to myself, but that's okay, because the more I talk to myself, the better I get at all this anyways, and the smarter I become at using some of these things. So it even helps me. Yeah, can't learn this much without also teaching it a lot of the time. So it's a benefit to me as well. So we can clearly see here, right? So remember we were talking about earlier that the 50 SMA system can be used on pretty much anything, and that the same thing that happens on SPY is the same thing that happens on zone, right? Because the rules of the SMA system are universal in the sense that the 50 SMA just dictates an uptrend or a downtrend start. Same level that dictates up, same level that dictates down. Anything that goes up must come down. Anything that goes down must go back up. And also the other thing is, right, anything that breaks out generally needs the back test, and anything that breaks down needs the back test. So you have one level dictates up, dictates down. Whether up, whether down, they all will reverse at some point, and then whether up or down generally are going to need back tests at some point. So when you know that even though this is breaking up long, it could last for, hours, or it might be very short. And when the market wants to, it could very well backtest. And where is its backtest? Its backtest would be to the price of $2.22. And we just saw that, right? We saw the push and then the backtest. Now let's go look at the S&P 500 and let's compare and see what had happened today. Today we see that the market has done what? This morning it broke down the 50 SMA and then it just backtested. So I'm going to go ahead and delete some of this stuff just so we can kind of make it clean. All right, so if we, let me actually, I could do like a quick side-by-side comparison too. So I'm going to delete this stuff here. Right, so if you're looking at zone here on the bottom right, I messed this up, but that's okay. Do that. Yeah, so zone on the right, up, over, down to 50. You can look at the SPY. SPY did the same thing, but it was a bearish move. Down below, back test 50, right? So, again, it's same strategy, two different markets, same rules apply, same approach, if you will. All right. So again, today, and actually sometimes TradingView's SMAs are a little incorrect, which, so I'm going to look at the SPY here. So this is exactly what I was talking about, how, the SMAs are generally the same, but they can be a little off. I trust, and I see the market use both of them at times, so it's kind of one of those things. I watch both, but in the grand scheme of things, it would just be this, right? So you see how on TOS, the SMA calculation is actually 66396, so it's right here, okay? And if we look at TradingView, you can see TradingView says that the market actually backtested the 50 SMA, which in reality on this data set, TradingView's data set, it did. It did touch the SMA. But if you're looking at Thinkorswim today, you go, it didn't touch the SMA. So if you were someone on Thinkorswim that was going to get short on the backtest of the 50 SMA and you're waiting for the 50 SMA and you're on TOS, you never got your entry. Now, if you're someone who was going to get, short on the back test of the 50 SMA and you're looking at TradingView, you did get your entry, right? Now, if you're someone that looked at both of the markets, you would just say to yourself that the 50 SMA zone is from a price of 66368 to 66396. So you do something like that, right? And we'd say, whether it be TradingView or it be Thinkorswim, just in general, we know that the SMA trend's kind of breaking down in this area, and the over-under, right, in that area be, again, somewhere in that spot. And so let's take a look at SPX. So I imagine since SPY is wrong, SPX is going to be wrong too. So if we look at SPX, real quick, there you can see they're wrong, right? So if we look at SPX, you can see SPX on TradingView hasn't hit, but you can see the distance to it. And if you look at TOS, you can see SPX hasn't hit, so they're maybe a little closer in comparison, but it's the gap, the difference is much less. So on TradingView, it says that the SMA calculation is, like 66344. And if you look here on TradingView, it says it is 666506, right, versus 66634. All right, so that's to go to show that there are differences in SMA calculations based off of platform and in brokerage, if you will, based off of how they collect and then present the data, or where they get the data from. So there can be differences, but as far as programs and algorithms and what have you, they are the closest thing to a constant that you can find in the market across all various platforms and data. So anyways, what's going on, Easy? What's going on, Wes K? I'm not sure what the giggle is for, but probably said something a bit ago. I don't know. So yeah, this, again, all that's going on just means we are currently in a neutral to swing bearish stock market. I haven't yet looked at any news today. And generally speaking, I really never look at news. I don't want to say never, but, and I'm not saying that it's not important. It's definitely important, but I generally don't look at news. So today, talking about, hey guys, we're probably gonna see the market come down. It's gonna break down, and then it's gonna stay down, and then it's swing. I haven't looked at any news once today, right? So I haven't taken into consideration anything Trump may or may not have said today. Anything anyone from any political office around the entire world said today. Anything from CNBC, Fox Business, CNN, Twitter, someone else's YouTube channel. I haven't looked at anything. I haven't read anything. I just simply opened my charts, looked at my systems, and said this is probably what's going to happen today. Um, so, yeah. So that's that. So yeah, well, I guess what I was getting at is, um, you know, you can you can analyze markets and have fun and have pretty good targets here and there without involving yourself too much with the craziness of news, right? That being said, there have been moments where me being caught up to speed on the news probably would have benefited me more. With having maybe my sentiment, maybe more conviction in something. Um, but I would say it's not necessarily needed, but it's good to be informed a little bit about what's going on. But I wouldn't say it's the grandiose thing, right? So, anyways, we should probably go take a look at the news just to kind of probably laugh more than anything. Kind of see what. Where did my. There it is. Just to see what pretty much Google's saying, right? Like, and I imagine it's going to be, kind of bearish sentiment. Bearishness is starting to come into play. So they're probably going to be and the volatility index is up a little bit. So the articles are usually going to be more fearful now because they're trying to spread the fear. Maybe that's another thing that actually I didn't really haven't touched on much, which is again, retail investors like myself and yourselves, we play a part in the market, but we don't control it. And so, that being said, if the market's going to go into a sell move, a lot of times they will, not they, but just the market will start changing its tone in articles. And whether that's just reactionary to the market environment or whether it's, staging news to hopefully progress the markets in one direction or another. I'm not sure. It feels like a little of both at times, if you ask me. But anyways, let's see what the news looks like today. Stock market news today. All right, so stock market today, NASDAQ Dow, waver with divided Fed, and Alibaba in focus. So Yahoo Finance believes that the markets are wavering because it's the Fed, right? Or Alibaba. CNBC says S&P 500 is a little changed. Nvidia to Oracle struggle live updates, which, arguably that's true. Stock market today, Dow up after home sales surprise. Stocks rebound as Alibaba gives fuel, which to me, those two right there are actually kind of interesting. Right, it says stocks rebound. Stocks are actually negative. Some stocks may have rebounded, sure, but if you look at the market's actually on neutral to bearish, right? So that's kind of a headline that's kind of counteractive to where the market's currently at. Here's another one. Dow erases early gains. S&P 500 and Nasdaq flat stocks worst day in nearly a month amid AI spending concerns. Alibaba soars. So, Market Watch, worst day in nearly a month amid AI spending. So, apparently the worst day yesterday is all because of AI, right? It wasn't because maybe the volatility index entered an uptrend a couple days ago and the volatility of the markets were increasing, and that generally means that markets are going to pull back. It wasn't the fact that the markets kind of entered a little bit of a downswing on the 30-minute the other day. None of that. But it's surely AI. There is no doubt, right? So again, a lot of times those are things you will see when markets start to turn. The tone changes. No problem, AK. Cheers. Oh yeah, I kind of forgot. Again, some possible reason to believe we may have a little micro pullback here. Again, it's just kind of, yeah. Alright. Yeah, so looks like the micro pullback destination for the market there is complete. So that one is all done. Cheers. It's definitely let's look at the Russell 2000. I mean, I bet the Russells, I mean, I don't know for sure, but my assumption is that the Russell's down today or not having the best of days cuz yeah, the penny stock market's a little slow. Actually another thing that we didn't talk about today, which is, definitely good. If you guys are ever dabbling in penny stocks, generally speaking, you look at the same thing. All right, so you look at the Russell 2000. Is this the Russell 2000? I know sometimes it's different on TradingView. Let me double check TOS because I actually am not too sure about the ticker on TradingView. Yeah, it looks right. 248. Yeah, okay. So pretty much, if the Russell 2000 is trading bearish, then obviously your penny stocks are probably not going to have as good a follow through for the day. You might not have, the biggest of moves, easiest of trades. So pretty much it's the same thing. If the S&P 500 and or the Russell 2000, pretty much both of them, but if the markets are in a sell move, you don't get as much bullish movement for the day, right? Same thing with this, equities, right? So the markets are down, the markets are below the SMA, so the markets are neutral to bearish. If you go look at Apple, how did Apple trade today? It was up and then, kind of giving back gains. Nvidia was just down. Microsoft down. Google down, right? UPS down. This Berkshire sideways. Lilly down, TSM down, AVGO down, Tesla up actually, UNP flat down, JPM up back to down, Visa nothing down, Amazon down, Netflix down, Meta down, AMD up then down, gave back gains, Honeywell down, PG actually maybe up, down, I don't know. But yeah, so you get the point. Pretty much when the markets are in sell moves or flipping the SMA bearish, then yeah, your equities usually perform bearish, and then the movement in the penny stock world is usually slower, not as good. So the days where the S&P 500 / Russell 2000 start to enter uptrends, those are the days where momentum starts to pick back up off stocks and on penny stocks as well. Pretty much all stocks for that matter. So when we go and we look at the Russell 2000 a day, right, we see it's below SMA. The past couple days, it's been on the up and up, and we've had some pretty good big booming moves over the past week in the penny stock market. But just in general, right, below SMA trend here, starting to be a little negative. Again, there wasn't the greatest follow through in the penny stock market today. Same thing with the S&P 500. S&P 500 is a neutral negative territory, or neutral bearish territory. Same thing. Equities, stocks did not perform very well today. So pretty straightforward there. Yes, Sam, the IWM ETF. Nvidia down, easy up. So yeah. It's been just kind of a slower grind. Not really. It's just been slower as far as opportunities amongst, say, penny stocks for longs today. Which doesn't even matter. It's totally fine. I'm just saying that's just kind of the environment you're in. It's not that it's a problem. It's just that's just the environment currently. Yeah, so let's just put the text back on the screen again, just so everyone is aware and up to speed and no one is confused. Market is neutral, bearish, not swing long or macro bullish for moment. Aggressive play is being short. Easy play, do nothing, be neutral, and wait for next buy signal. Cheers, everybody. Cheers. Thumbs up. Yay. Yippee. That's crazy, man. The market's going down, dude. Man. Can't wait for the headlines tomorrow. Market erases. Actually, I have no idea because, markets can always do whatever they want, But that being said, with us being neutral to bearish, I can only assume, unless we go back into a buy signal, that our headlines are going to be looking pretty shiesty tomorrow, especially if the sell-off continues, right? Now, we haven't really... Well, I guess we kind of have... waiting for the next play is the hardest part. I mean, yeah, I agree with that. For a lot of people, it can be definitely, especially this system, right? For me to be back long on the market, we have all we have to do is just wait. Yeah, because, I mean, for me, we can't be... Well, let me rephrase that. To be back kind of swing long and holding long a position, as it relates to what we see on the screen on this time frame, we got to go back to an uptrend. Right now, we're in a downtrend, so can't really be long. Unless it's shorter term counter longs. That's okay. The only long setups that for me would make sense to, take part in while in a downtrend are counter longs, which do exist. But to be bullish sentiment and long bias, we would have to be in an uptrend, which we're not. So as far as waiting for the next kind of long macro sentiment change, yeah, I mean, it could be a day, it could be 3 days, it could be 2 weeks. It just all depends on when the market goes into an uptrend, which I and you do not control. It's just when the market wants to, when it's going to do it. And even when it happens, sometimes you don't even know that it's going to flip into an uptrend, and it just kind of happens and the market just goes, right? So yeah, we're just kind of chilling. As far as the stream goes, and as far as the analysis on the stream and the forecasting, the main analysis, which maybe we're going to have to start putting like another scroll box on the screen or another little info box that kind of keeps up the main analysis so people don't get kind of confused as we're talking about other things, which is which is neutral to bearish right now. That's what you can be. It's just a neutral bearish S&P 500 environment. So yeah. Now, as far as the next play or the next play, you could use volume weighted average prices in very short time frames, and there will be play after play. It just depends on what style you want to go with. But if we were to do anchor VWAPs on, say, 1 minute charts, there's play after play after play. So we're going to take this breakdown here, we're going to anchor to this high, and we'll anchor to this candle here because it kind of breaks down. This one, it doesn't work out the way I would like to, but you could have, I'll just get to the point, which is just essentially anchoring VWAPs to find little moves. So for example, this was a 50 SMA rejection, and so this is what we call the 50 SMA VWAP intraday trend. Essentially, the rules would be if you hit the volume weighted average price here, and then obviously, if you hit the 50 SMA and pull back, then you run VWAPs down, and you can stay bearish into that VWAP trend. If it starts to clear above, you have to be kind of cautious and stop out. So that's how you could, set together a trade over the last, 20, 30 minutes by using that particular kind of system. You could have also entered a short trade right here on this leg by using most likely the volume weighted average price of this high. So if we anchor the volume weighted average price of this high and kind of the breakdown of this high, and it's kind of missing too, and this is where we call the VWAP chase strategy a bit, but ideally what you do is you take the volume weighted average price of each high, anchor it, and then that VWAP will be many times the retrace level and then the continuation. And then you would anchor to, like we just said, this high here, which would be kind of right there, and that would give you the next expected retrace and then micro sell entry. So that would be kind of a scalp, more of a scalping short-term approach to the market. But as far as having to be patient and wait for the next move, this would be more of a higher frequency opportunity system, if you will. And here's another example back here how you could use it on long. So here's the low of day, right? We would anchor to this low, and then we would look for support trend holds into it to be long at. So market bottoms, goes up, pulls back into, creates higher low long, right? So that would be a kind of intraday momentum long tradable scenario that you don't have to wait days or weeks for, maybe just 5-10 minutes kind of thing. And then, for example, once this market blasts off like that, we can then re-anchor to this low, and that would give us the next expected pullback and then higher low. So we'd anchor this low, goes up, pulls back down. That would be our next support entry area for long continuation. So that's how you could have had two trades kind of back to back in more of a short-term momentum scalping environment by using volume weighted average prices with previous price actions of the market. And that can get you into more of a more frequent trading opportunities. They're not, necessarily swing, big, huge move, but that's how you can kind of get a feel for the markets in real time and know where other people's volume levels are at and what have you. Another one was the 30-minute back test short today, right? So the market broke down. This would be more of the swing entry, right? So when the market broke down and then it came up, when the market broke down today and then came up for the back test, right? So again, if the market breaks down, stays below the SMA, the market remains neutral to bearish. You could have taken, short entries up there on the back test, and that would be more of the swing short entry. So that was the probably the ideal swing short entry to participate in the bearish to neutral market environment with very low risk, because again, that's the breakdown. So if I throw a little price line here, like right there, right, this is where the market turned bearish right there. And then this is the back test. And so that would be the low risk entry to stay on the swing short move. The Darvis box method. I learned that a long time ago. I think that's what it was. I forget kind of how it's meant to be used these days, but I did learn a bit of it some time ago. Again, guys, on the screen here, the counter long target for Bitcoin, I believe, is around 114,300 to 114,600. That target is essentially some daily volume weighted average prices of the previous price action of the Bitcoin market. Effectively, if we're able to take the price up to 114,000, 114,600, give or take, we will essentially be resetting the daily chart, which is totally normal. It's actually very healthy for markets to do that. So it's just a volume. It's a volume price, volume weighted average price, value area, and if we go up there, it's just simply creating a daily chart bounce counter move, which again is it's very normal, totally normal to what you would like to happen in the market. Markets going to and from, liquidity, etc. So I do think that's where we're going. So anyways, there's that. And again, it's the same thing as you guys just saw, with Bitcoin or with SPY. We're just simply taking previous highs, tracking the volume weighted average price of those previous moves, figuring out where key volume zones would be at that would start eliminating previous market participants. And when I say eliminating, it's stopping out. If we run Bitcoin up to 114,000, 114,600 or whatever, we're effectively stopping out a lot of the daily chart market of the previous leg. So, again, guys, none of this is trade signals, if you guys will. This is just analysis, key levels, and essentially analysis, which many times does end up coming true, thank gosh. And I guess that's just what I get for spending 10 years of my life in front of a office and computer screens. But anyways, yeah, so again, these are not trade signals. We're not signaling for you to do anything. Kind of, we're just simply walking you through markets in real time, and hopefully helping you guys understand market functions and how many times we can take markets up and down, to and from specific price points. Is the VIX. Yeah, daily chart on the VIX is positive. 1 year day coming up into that 100. Interesting. market's down even further. Who would have thought? Crazy, crazy. You know, I haven't really been thinking too much of downside. I mean, I've thought of some downside targets, but not really. I mean, I guess I have. Yeah, so you know, if we're arguably looking at, you know, I mean, I wasn't say, you know, as long as the market, I mean, that just sounds dumb saying it, but I have targets, you know, for the sell move as low as, you know, 6,606. Well, hold on, we have to double check the 1 hour. So, I forgot about the 1 hour. My apologies, guys. Yeah, so the market. We broke down the 30 minutes, so that means we sell to the 1 hour. I always forget to announce that when it's happening. It kind of slips my mind, but pretty much our sell move right now is down to this 1 hour level on both SPX and SPY. And so wait, hold up. This is oh, that's right, because this is TradingView, and TradingView levels are wrong. That's why. Yeah, we got to go over to here to this guy. But yeah, generally we break down the 30-minute, we trade down to the 1 hour, but I'm looking at TradingView and it's wrong, I'm pretty sure, on that regard. Let me just double check. Yeah, so you can see here, look at this, ready? So you can see how we had the 1 hour breakdown. See, look at this. See how the 1 hour is already broken down on TOS, which, by the way, they might still use the 1 hour 50 SMA on TradingView to do a temporary bounce or like a temporary hold on the market and kind of pause the sell-off. We'll see about that again. But generally speaking, the 1 hour a lot of times is used as a little mini support on the markets, just like we saw the other day, right? You see, just the other day, market sell off the 1 hour. We used the 1 hour to bounce the market, right? So we did a 1 hour bounce yesterday. Now the 1 hour is negative, so that's obviously bearish. But you can see we've broken down that 1 hour already, and you can see how on TradingView the 1 hour isn't broken down. So again, TradingView levels are always a little skeptical. We always like to use the TOS one, so I apologize about that. But anyways, yeah, so we're trading down on that 1 hour, and the SPY, I don't know if that's gonna really happen though. Let me just do some other things. Yeah, I mean, personally, I would love to see the market all the way down to the price of 6,618 to 6,605. So this would be kind of going for a full-blown sell move and essentially washing the entire market from FOMC. So if we do, in fact, wash the entire market from FOMC, then we would be expecting to see the price of... See, on SPY, it's a little different. 65452 to as low. Well, if we're washing well, I guess that's true. But yeah, anyway, 658, 654. Those are two areas of interest on the downside for me. Yeah. Again, so again, we don't really talk too much of targets on the downside right now, so I figure we kind of start talking about that as the move is continuing in that direction more so. But yeah, so here's that. Actually, I gotta double check some other stuff here too before I make a mistake. Daily red there, yeah, so that would be here. That could get interesting. Do this down there. Let's just take QQQ, 30 minutes. 30 minutes nag on QQQ. Yeah. Well, anyways, uh, well, actually, I should also look at. So we did that. It's debatable. No, our Discord really, or our free Discord. Sorry, we don't have a free Discord anymore. We still have a private group, and a Discord with that, but we're moving to a new site. It's almost ready to move to, may, which we may no longer use Discord at all. We're kind of undecided on that one yet. What is the future for Boiler Room? Pretty much the same thing we've always, pretty much just what you're seeing now. Streaming, market analysis, helping people as much as we can with the markets, and that's pretty much it. Real quick too, I do want to get. I just want to make sure everyone kind of knows this too, as it relates to. I'm just gonna delete. Well, yeah, whatever. Just to clean this stuff up. Remove all. Yeah, so real quick, looking at our friend Bitcoin. Again, our counter long target is that box, and then essentially as we get to the box, I'm hoping that's not the top now, but as we get up and into this area, whether it shies it or we get the full tag, then you're looking for resistance. All right, so essentially all of this bounce, in my opinion, is meant to get sold into again, but this counter long has a price target as high as here and then down. So if it shies, we'll see, but I just want to kind of make sure everyone knows that we're not looking at Bitcoin right now, this move up and this counter long, as in it's the best long bullish move of your life. It's a counter long back to resistance. So, and ideally, assuming that's the very, very low risk resistance counter area. Okay. Yeah, yeah, exactly. Tiger. Yeah, just like Oliver said. I mean, we have a Discord. It's paid. We might be moving away from that, but just in general, is paid, and it's really just there for, again, learning about markets in real time. And yes, there are trades that are done. We're not sitting there pumping trades. We're not just doing a bunch of live trading trying to get people to buy in after a move or anything like that. We do no pumping of stocks, no alert signaling. It's just simply teaching how markets, for the most part, function. How they go from price A to price B. Why they go from here to here. How you can start building your own prediction about how and why markets are going to start doing things. Like, for example, today. How today we've pretty much told everyone in the stream from start till now that you are bearish the market or neutral, but not bullish. And so far, we're having one of the worst days in the market in a long time. Okay? Um, and that's simply just from analysis, right? Just understanding trend, possibilities in the market, things that can happen. So as we said before, we have potential downwards moves on the market as low as the price of 6,621 on SPX to 6,606. As it relates to SPY, that would be whoa, no wonder why that was wrong. Hold up. Yeah. I was gonna say, I'm like, something is just seeming way off on that. I had it anchored incorrectly. But anyways, yeah, to as low as $658. Now, that's like worst case scenario sell off. It doesn't happen. Not that it doesn't happen, it's not as frequent. This setup and the sell off that I'm talking about, it's not a setup that we see come to fruition as often. But it is a play and a breakdown and a sell off that we do see from time to time. And when it does happen, it rocks the market because the market gets cooked big time. It goes down pretty far and it turns into a big old cascade of the market. And then by the end of the day, everyone's like, oh my gosh, it's crazy. The market is down so big. Everyone freaks out. And then CNBC tells you that Powell destroyed the market. And then someone on YouTube is going to post that the stock market's crashing and all this stuff, right? So, again, I'm not saying that is going to happen. I'm just saying that there's interesting price points on the market that are down that far and that we do see come into play and do see happen from time to time when the markets start doing things that they're currently doing right now. Again, so it's not to say that you should sell the markets all the way down to those prices. It's to emphasize the risk of the market right now. The risk is that the risk is the risk is the risk, right? Now the risk is that we are in a bearish environment, so we're not bullish. And that bearish environment could arguably sell all the way down to $658 on the S&P 500 today, maybe even into tomorrow. Just depends. I don't know. Again, but one thing's for certain: you're not bullish the market. You are neutral to bearish, and that was mentioned again in the pre-market session today, and for every other minute of the stream that's been going on for now 3 hours and 29 seconds. So yeah, essentially the objective of our service and, Boiler Room Trading, our private group, and again, essentially what we're doing here is to, in real time, hopefully teach effective market psychology, market analysis, provide hopefully foresight analysis of the market, doing things before it happens, teaching you trend, keeping you guys on the right side of the trends as the markets are changing, and then understanding why those things are happening. Not because of what the news says, but because of what the markets are saying, right, in real time, not the news. So anyways, cheers. Hope you guys are doing well today. None of you guys should be long bias swing trading the markets or taking any new long swing entries on the markets today, as we mentioned. So yeah, cheers. We're currently running into the daily 10 SMA, so this is kind of another important simple moving average that the market is trading down and into. Essentially, I don't really care what happens at this price point, but obviously one of two things happens. Either the market kind of supports a little bit at the 10 SMA on the daily, or it doesn't. If it doesn't, that would be, a sign of more weakness, right? Not that I really care, though. It's just something that we're coming into, right? So this, we'll just mark it on the chart just for funsies. So this is your daily 10 simple moving average over under, right? So, anything, if any bouncing occurs right here, it's again simply probably your daily 10 SMA on the SPY, which, yeah, you guys know, you were just looking at it, but right there. Then real quick, we'll just bring down we're gonna bring down this chart right here. All right. So as we always say, day in and day out on the market. Ready? So we're just going to do this for funsies. Ready? So when the market is below the 50 SMA, it's a neutral to bearish environment. Below, neutral to bearish. Above, just straight bullish. Okay? When below, neutral to bearish. 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 When above, just straight up long bias. Okay? Continue on. When below, bearish. When above, bull. 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 Now we go to where we're at now. Maybe one day we'll get there. When below, neutral to bearish. It's as simple as that. Kind of. And so today just so happens to be the day. Well, also yesterday. So yesterday we broke down, but we didn't have a back test. So then by the end of the day we back tested. And then this morning in the pre-market session, right? Then this morning in the pre-market session, then the market, and then this morning in the pre-market session, right about, it was, wait, where was it? Was it here? Hold up, I'm losing my train of thought. I didn't mark it off, that's why. 30-minute right there. Yeah, and then today in the pre-market session, we broke it back down. So again, I'm just gonna kind of walk through this a little bit. So yesterday, market breaks down 50 SMA. So market breaketh down. Then in the after hours, market back tests. Market fails to just basically stay down, right? Then it grinds up back to the 50 SMA. Tries to push over, can't, back under, whatever, can't. Pulls back, can't, whatever, can't, blah, 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 blah. And then into the open, we break down the 50 SMA, at which point the market can be going to a neutral to bearish environment, and the market stays down, right? And the market never gets back above to be bullish. So the market is what? Market's bearish. So again, our sell-off, the pullback started with the volatility signaling us that something's going on. The volatility breakout allowed us to pull the market back yesterday, so far that we then broke the market down. Through the after hours and overnight session, we use that manipulated futures higher. We manipulated futures pretty much to backtest the 50 SMA. Hold in the market until the open. At the open, we break the market back down and we run a sell program on the markets today. We then take the market down in a selling program down to, well, as far as the market wants to go until it gets supported. The 10 SMA daily is one of those areas. I don't know. Yeah, so, no, it's the 50 SMA on the open high-low close, not extended trading hours. Yeah, non-extended trading hours. And it's not to say that the 50 SMA on the regular trading hours doesn't work and is not effective. The extended trading hours 50 SMA works the exact same as the regular trading hours does. It's just the SMA calculations are different because the SMAs obviously calculate with the low volume price action overnight, whereas the 50 SMA on the regular trading hours only calculates price based off of the regular trading hours volume, which is significantly higher always than any sort of after hours in pre-market. So the way that I interpret that information is the SMA calculation from regular trading hours is a more accurate weighting of the SMA since its calculation comes from only regular trading hours, which is the bulk and the meat and potatoes of the stock market volume on any given day. Higher volume during regular trading hours. SMA calculation of regular trading hours, a little bit more accurate SMA calculation, if you will. But the SMA for the extended trading hours charts functions and they work the exact same, which is when price is above 30-minute 50 SMA, market go up. When below 50 SMA, market go down. There is ways that I do use the extended trading hours 30-minute 50 SMA in conjunction with the regular trading hours 50 SMA, but it's not necessarily needed. It's just a little bit more information at times. Sometimes it helps, sometimes maybe, not so much, but anyways, that's pretty much that. I can't say I don't see any new any new penny stocks or anything like that jumping out. And again, right, when I'm looking at the biggest gainers today. Can I detach that and it stays there? Lit. Okay, so that's how that works. Yeah. Well, anyways, I will. Yeah, pretty much. I'm just saying. I was just looking at this biggest gainers list, right? And again, there's really not much change in today. And again, that's pretty much the way it should be because the markets are down, right? Markets are in a selling program, a selling operation. Also, when I say selling program or I say selling operation, does that mean that I know that someone somewhere literally just put a program on the market and said, sell? No. But we do know that when the market transitions below the SMA like it did today, we are more likely to enter a bearish trading environment. And then we also know that retail traders don't control the market. High frequency trading computers, algorithms. When we say algorithms, those are really just programs built by quantitative analysts and computer scientists to make automated investing happen, right? And a lot of the ways that they will do some of their short-term investing and whatever, a lot of it's derived around SMA calculation. So anyways, we just know that when the market flips bearish, we say it's a sell program because we know that the algorithms that drive the price of the markets are not buying equities long, right? And if they're not buying equities long, they're selling off equities. So their programs are flipped to sell, not buy. So Is there a deliberate sell program that's literally selling the entire market down? No. But is there many different strategies of computerized buying and selling programs, investment firms that are no longer buying on the upside right now? Yes. Are they selling? Yes. So again, when we flip the markets bearish, selling programs come into effect. When we flip the markets bullish, buying programs come into effect. So if you hear me say there's a buy algorithm, sell program, buy program, that's what that means, is that we know behind the scenes the algorithm says flip from bullish to bearish, and as a result you're most likely to see selling, right? So today we have a sell program taking place in the market. And that sell program so far is very successful. And arguably it's going to go as low as 65881 even today. So yeah, that's what we're seeing today. We're seeing a selling program taking place in the market. Now, I'm going to bring up the volatility index because this is another very important part of what we're teaching here. So you see this entire drop in the market, right? How did you know? And I don't want to say how did you know, but what could you have used to help you identify that a shitstorm might be on the horizon for the stock market before it happens? The volatility index. That's literally its job. The volatility index is a volatility gauge, right? It's there to give you implied volatility. That's literally the volatility index and its job. It's the expectation, or the expectation of an implied move over 30 days, right, of the market and options change. Actually, I'm probably saying that a little incorrectly. It's been a long time since I learned exactly the verbiage, but basically I think it's the 30-day, it's 1 month out, 30-day expiration options, which create the implied volatility of the volatility index. So it's basically the calculation of 30-day out expirations of SPX options that give us the implied volatility of the stock market. I may have said that slightly incorrect, but that's what that is. And so the volatility index over the past week has been implying that volatility is increasing. But as we said before, well, actually, let me rephrase this, because, you know, just because you see that the volatility index is going up, it doesn't mean the market's going to go down. It doesn't mean the market has to correct, right? It's implying that something may be on the verge, right? So whenever you see volatility going up, it's like a signal. It's waving at you. It's like, hey, pay attention, dude. Why is the volatility index going up, right? Why is people getting fearful, and so on and so forth? But the main takeaway here is that the more you follow these two systems that I'm showing you on the screen, the more it's going to make sense. For some of you, this will make sense, maybe not. But just know, the more you follow it, the more you will see what I'm talking about. And what I'm about to tell you is that when the markets enter a selling program like you're seeing today, 9 times out of 10, the S&P or the VIX is in a buying program. And I would say 8 to 7 times out of 10, the buy program on the stock market or the sell program coincides or matches up with the VIX, which is, if the market at 1 p.m. today starts a buy program, then generally at about the same time, the VIX started its sell program, which is going below the 50 SMA. It's literally the same thing. So if the market started 1 p.m. today, a buy program above the 50, then almost always the VIX would have been starting a selling program at the same time, or previously started a selling program, right? So normally when that transition happens, like today, the market transitioned bearish, right? Normally the VIX would be in a buy signal. But this past week and a half, we started seeing the markets in a buy signal and the VIX in a buy signal, right? Like I said before, If the market's in a sell program, VIX is in a buy program. If the market is in a buy program, the VIX is in a sell program. If VIX is in a buy program, market sell program, right? Market buy program, VIX, they're the exact opposite generally. And the 50 SMA trend is that shift point. So, like this week, this was one of those weeks where the VIX was trying to signal this move, right? And it was correct. It's not always correct, but if we look, right, look at the VIX on this 30-minute chart here. So leading into FOMC, volatility was up. That happens almost every single time. So just know that the next time the FOMC meeting happens, that Monday, maybe even the Friday leading into the next week, the volatility market will start to increase. And a lot of times it will create an uptrend, just like you saw. So this week, or past week or whatever, the volatility index started an uptrend because FOMC was happening. FOMC is a volatility event. Volatility increases around that event. So obviously, if we know that FOMC brings volatility, then we know that the volatility market's probably going to increase. So we see the VIX go up during FOMC weeks, but we don't use that increase in the VIX to be like, oh, the market's going to be bearish. No, we know that the VIX is only going up because of FOMC. Whether FOMC may drive the price bullish or bearish is another story. But we don't look at the increase in volatility during the weeks of FOMC as a indicator that the markets are going to go down. Okay? But when you have a week like this week, where a couple days ago, or I think this was like 2 days ago, or maybe a day ago, or whatever it was, the VIX, right? So the VIX isn't, it's below, it's trading sideways, and then it actually starts breaking out. It starts breaking out into a buy signal the same time that the market, and I'm going to delete all of this to make it clean, at the same time the market's in a buy signal. So ready? I'm going to throw a vertical line on the chart, Alt-V. So where I just put that vertical line, and now I'm pointing the arrow to, that right there, that's when the VIX broke out into a uptrend, arguable buy program. Okay? So a couple days ago, we go, we're in a buy signal on the market, but the VIX is telling us something completely different. The VIX is starting to break out, arguably starting a buy program, while the market is, at this tippy top and it's in a buy signal. So you go, that doesn't make sense. Connor, why doesn't it make sense? And also, now the 25 of you guys watching, why doesn't that make sense? Because 9 to 8 times out of 10, if the market's in a buy program, the VIX is in a sell program. And if the VIX is in a buy program, the market's in a sell program. So why is it, Connor, and now the 25 of you guys, why is it 2 days ago the VIX started breaking out into a potential buy program while the market's in a buy program? That doesn't make sense. So one of them has to be incorrect, meaning one of the markets is lying. Who's lying? In this case, it was the stock market, and the volatility index was correct. Now, arguably, the volatility index could have broke out into a buy program, and the VIX been wrong, and then the market ends up blowing up into another long, right? So everyone that used the volatility index's buy program to start being bearish the market could have been wrong and got blown out, right? That could have happened. Okay, it's not to say that just because the buy program started on the VIX, right? You see that just because that uptrend. Let me shrink this over, right? Just because this uptrend started where I'm pointing to with this new line, right there. I'll delete the old ones previous. So yeah, just because this uptrend and this buy program on the VIX starts right there, it doesn't mean that the market had to tank, right? But it's starting to tell us to pay attention because it doesn't make sense, right? Because we know, like I said, if the VIX is in a buy program, VIX should be in a sell program. Now, all of a sudden, the markets aren't performing. They're not making sense. So that tells me either the market's getting ready to get spanked, or there's a slew of people that are about to get short and get blown out, which sounds kind of dumb when you say it, because then at the end of the day, it's really just, oh, well, market can go up and down with whoever loses, right? But not really, because there's more to it than that, which is, again, this VIX getting positive and going to a buy algorithm shouldn't be happening. So as a result, I just go, okay, well, since that doesn't make sense, we should be less long bias, right? And so all of a sudden, the market starts to do what? And it starts to tank. Because why? Because the VIX is going into a buy program. And now we're going to use that to sell the market down to the 50. And then if the market goes into a breakdown, then it's a full-blown move, right? So that's what we just got. We used the buy program on the VIX over the past couple days to pull the markets down to test their over-under. Market breaks down, and then into this morning, we break the market support and the trend, and we run it bearish. So the VIX was implying for the past couple days that essentially the market was going to get cooked, right? So yeah, that's the relationship there. So that's why this past week was a little interesting, because of the signals that were being generated on the volatility index are not something that we don't see. It's just not the typical thing, right? So it was a little interesting this week with that setup. All right, so pretty much what do we know is happening? We know that the market on the S&P 500 did what? It sold down into its short-term 10 SMA moving average, which is a algorithmic level that pretty much every high-frequency trading firm and investment firm pretty much knows on planet Earth. And so when the market trades into that level for the first time, a lot of times you get the opposite reaction. So as you can see, this is the market using the daily, and there could be Fibonacci down here, there could be somebody else's 100 SMA down here, there could be a million things down here, but as it relates specifically to the daily 10 SMA, that's right here, and that's a big level. And so essentially we're just doing a bounce on that, and I'm assuming based off of where we're bouncing, also, like, here's another example on the 1 minute, right? So if we look at the 1 minute chart, it obviously started down here, so it was down, and then it had a back test here. So from the back test, I would call that a back test and then the start of a downtrend, right? Because if you come up to such SMA level and you don't go above and you start going down, then from that start point, that would be the start of a 1 minute downtrend. 10 SMA bounce back to downtrend. So you're just seeing what we see on the 30 minute and the daily or whatever repeating on a 1 minute right now. But anyways. And this is the top there, so I'm just trying to track where our next resistance mark can be here real quick, which we're probably running into it right now. I'm probably a little late to this one, but we'll see. Yep, there it is. Yeah, so we're coming into a little bit of a resistance zone here on the market. So that's short-term tradable environment down. And we're going to take this to the box that I'm going to put on the screen. Most likely, I would assume that the markets will be interested in taking it down to the price of 660.33 to right here. So let's see. This is pretty much the expected pullback. Yeah, I'm sorry, I was a little late to that one. Again, a lot of teaching, talking, what have you. But ultimately, that's how I kind of see the market right now. We took the market down to 10 SMA. We then bounced the market back up to some volume weighted average prices of importance. Those hold some temporary resistance, pull market down to the current 1 minute volume weighted average price support from this most recent low. So again, we made this low, we bounce it up, hit resistance, now pull back. If the market can establish a higher low here, then you'll have a little bit of a momentary tradable up environment scalp situation. That's pretty much that. Yeah. Actually, kind of shied that level by a little bit, whatever. Maybe. We'll see. Probably. I don't know. Who knows? Well, considering most of you guys already know my name in stream, that tells me that the stream, it would appear that it's not necessarily getting to the new crowd yet, if you will. I guess that would be a good question in chat. How many of you guys in chat here, out of the 20 of you, have never seen one of my streams or never seen a video? How many of you are here actually for the first time ever? Or this is, say, your first week watching this channel? Don't be shy if you're in there. I would say most of you have seen either old channel or this channel at some point. But if you haven't, feel free, let me know. It would be interesting to see. Yep, so yeah, appreciate that, Roberto. But yeah, you know, it's kind of was. I do appreciate it. I really do. But that's what I was talking about so far. As you've probably seen the channel once or twice before, been with us at some point. So yeah, kind of as expected. Well, you know, we got to give the algo some time. You know, YouTube likes consistency, and they won't really promote the stream too much unless they see that we're online every single day consistently. So hopefully that you know, makes a little change there. Wouldn't mind. That'd be cool. All right. Well, again, just gonna kind of jump around the old penny stock world. See if somehow we're getting lucky and anything is doing something. Oh wow, that's lame. Yeah, it's kind of looking at TNFA again, but it's already. Yeah, I mean, it's kind of already moving and way late to that. Nope, have not heard of price action trading by Al Brooks. Nope. That's another kind of interesting one. Yeah, I think I will. Funny, 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 funny. Oh, that is absolutely comical. All right, we got to bring up ATCH again, because again, just a perfect learning lesson, not only for myself, but for you guys. So again, this morning, ATCH was a stock we talked about. Not that it's a great stock, but just again, there was opportunity we saw, and pretty much this is how this worked. We saw here with ATCH, the ATCH started a 15-minute uptrend. The 15-minute uptrend starts as it breaks over the 50 SMA, right? Now, the market did not fully come back and backtest this SMA, but the point being is you can see how, oh, hold on. Oh my goodness. Come on, TradingView, or whatever, Thinkorswim. There you go. Yeah, so essentially we had a 15-minute breakout, and we tried to run the price up towards that 30-minute. We got very close, missed it by a few pennies, but essentially this is a 15-minute uptrend breakout to 30-minute, reject below 30-minute downtrend. 30-minute downtrend brings the market back down towards the 15-minute uptrend, 15-minute bounce, right? And so that ends up looking like this on the 15-minute, right? So you can see how we're using that 15-minute trend change to create that 15-minute uptrend, right? Market was down, so market was above, then it breaks down. Market go down, then market breaketh up. 15-minute up. Okay. Cheers. Anyway, so that's just a little bit of a part of ATCH today and so on and so forth. Looks like the SPY is just pretty much hanging out at the same location it was just a few minutes ago, which is just the volume weighted average prices of this market as it's rolled over to the downside. So pretty much that just means that we're still in a bearish market. We're just going through a short-term, temporary, long tradable bounce, and then most likely finds resistance and then gets sold into again. Again, the current over-under right now for SPY is at about 660, 68. So again, that's what's going to dictate the next move. Essentially, once market gets acceptance below here, it's going to go right into that target on the downside. Oh yeah, I kind of forgot. We got to throw an anchor off this high here too. Yeah, because then also our 1 minute counter pop level is still on, it's basic, it's kind of like, yeah, it's anywhere from here to there, so that's our counter pop. Yeah, so essentially it's, which it's kind of already doing, right?
just know that, again, if we keep breaking out, one of the next targets is going to be up here. So essentially, if we have a successful breakout of this previous top on the SPY market that you pretty much see, then we have a target up to 66145. So, you know, it's pretty straightforward, which basically means if invent market successfully breaks out this top, holds above, market's going to go right there. So I'm going to delete up some of this stuff. Also, the market currently has a new established kind of low point in here. It's kind of goofy looking. I don't really like the way it's set up, but that just brings us a little pullback target there. All right, cuckoo. But yeah, so like I said before, it's just looking at the previous trends, right? So if we look at the previous trends, and we're just basically looking back to here. If we get above, let me go. Alrighty. Well, you know, I say that's probably pretty good for today's stream. We have predicted, well, yeah, mainly just the direction of today's market, along with one or two decent little penny stock tradable environments. So I'd say overall today's pretty decent, especially since we were on the right side of today's trend for the market, which is probably one of the biggest sell-off days we've had in some months. So to be on top of that and then to see it before it happens and then pretty much to walk everyone through it as it unfolded and keep you guys on the right side, that's pretty good. Can't lie. So anyways, cheers. Hope you guys enjoyed. Catch you tomorrow.